What's up everybody, welcome back to my channel where I give you guys rational, simplified investment analysis so you can make an informed investment decision. If you've watched my videos in the past, you're probably realizing that I'm not using the green screen setup that I normally use in my videos, and from now on, to make the videos a little bit more enjoyable and entertaining for you all, I'm going to be using this office setup in all of my videos. Now you'll notice that the camera quality for this video is pretty poor, but you're only going to have to suffer through that for one video, as I just ordered a new webcam that's going to be solving that issue, and by next week's video you'll have good 1080p quality for all of my videos moving forward. So with that, let's get right into it. The stock that we're going to be talking about today has grown 9,200% in the last 2 years alone. Now you might hear that and think, how is it possible for the stock to continue growing? However, I guarantee you, if you watch this entire video, you're going to see exactly why it is likely that this stock is going to continue experiencing high levels of growth for the next 5 to 10 years. Now, if you enjoyed this video, please hit the like and subscribe button, as it would really help me out. And in return, I'm going to continue bringing you guys high quality analysis on a weekly basis. So by now, you've probably looked at the whiteboard behind me and you know that the stock that I'm talking about is Enphase Energy. Now, Enphase operates within the solar industry. Now, in the last decade alone, the solar industry has grown exponentially and has actually averaged an annual growth rate of 49%. Now, this growth rate has slowly tapered off towards the end of the decade, and in this last year, it's only grown around 22%. But even still, a 22% growth rate for any industry is extremely high, and we're likely going to continue seeing this growth trend extend into the future as more consumers are switching towards sustainable energy sources. Now, taking a look at this chart, you can see that the amount of energy produced by solar in the last decade has grown exponentially. And in fact, it's not just consumers who are making the switch over to more sustainable products and ways of living, but in fact, Larry Fink, the CEO of BlackRock, who is a $7 trillion asset management fund, recently stated in January of this year that the largest issue facing investors is going to be the sustainability of their investments. Now, a statement like this made by somebody who is the CEO of a $7 trillion asset management fund should be taken very seriously, and likely what we're going to see is a lot of capital shift over from unsustainable energy production over to more sustainable sources like solar. So the industry is also going to benefit from massive capital inflow from investors reallocating their capital from unsustainable energy towards sustainable energy. So now that we know that the industry is going to be experiencing high levels of growth for the foreseeable future, let's take a look at Enphase Energy itself, why it's such a great company, and why it's likely going to be experiencing higher levels of growth than its competitors. Taking a look at Enphase's revenues over the last year, they've nearly doubled, while their operating profit has increased by 6,700%. Now, earlier when I said that the stock grew 9,200%, now it starts to make a little bit more sense looking at how rapidly their operating profit was able to grow in just 1 year. Now, Enphase has branded themselves as the world's first truly integrated energy system. They not only provide solar energy, they provide storage, and they also have an app that monitors the entire system. Now, there are two main issues with solar energy up until this point, which Enphase has been able to solve. The first is that the cost of installation was extremely high, which limited the number of consumers that were actually able to afford a solar energy system. However, in the last decade, we've seen the cost of installation fall around 70%, allowing not only Enphase but other competitors to be able to install solar systems to a very large number of households around the world. And the second issue that came with solar energy systems was that they're very challenging for consumers to understand and to maintain. Now, Enphase directly tackles this problem by having an app that monitors the entire system, and this provides them with a very large competitive advantage because they're able to make the installation and management process much easier for the consumers. Now, the component of Enphase's business that really stands out to competitors is actually their microinverters. So the role of solar inverters is to convert the energy produced by the solar cells from DC to AC, which can now be consumed or stored by the household. Now, a standard solar energy system will have one central inverter, and that takes in and converts the power from all of the solar cells within the system. And the issue with this system is that if one of the cells is faulty, the entire system isn't able to produce energy anymore. This is where Enphase came in with their microinverter technology, which they're able to place on the back of each solar cell so that they create an independent system where if one cell fails, the rest are unaffected. This way, their energy systems are much more efficient than the competitors, and the consumer is able to benefit from less issues with the system. This has given Enphase a leadership position within the industry, and actually their microinverters are rated top within the entire solar industry. Now, the way that Enphase is able to maintain this leadership position is through their research and development. And now actually around half of their employees work within research and development. And through this, they've been able to generate 300 patents around the world, 233 of which are within the United States. This means that their competitors are going to have to play a lot of catch up and spend a lot of money in order to produce products that are on par or better than that of Enphase. So Enphase not only has the world's first truly integrated solar energy system, they have the best quality microinverters on the market, and as such, it is likely that they're going to continue seeing very high levels of growth in their revenues and operating profits for the foreseeable future. So now let's take a look at some of the risks facing the company. The first major risk that the company faces is that their R&D expenditure is currently a little bit lower than that of their main competitor, SolarEdge. Now, this isn't a major risk currently because the difference in research and development isn't that great yet. However, this is definitely something you're going to need to watch out for because of the high levels of innovation in the industry. You want to make sure that Enphase is going to be keeping up and actually leading the charge on the new innovations within the industry. Now, the second major risk is that Enphase has been targeted multiple times by short selling firms. Now, these are firms that take a large short position on a stock and then they release a long bearish report, usually saying that the company is doing something fraudulent in order to scare investors away and cause the stock price to tank, at which point they reap in massive profits. Now, this is the second time that Enphase has been targeted specifically by Pre-Science Capital, and they say that Enphase has fabricated around 30% of their revenues. Now, I read the entire report, and actually this company seems to take the stance that the SEC is also fraudulent, so I don't really place much value in the content of that short selling report. However, it's something that you should definitely be looking out for because given the high levels of growth the company has seen over the last couple of years, they're going to be a prime target for a lot of these short selling firms, which is going to make the stock much more volatile. However, it's also going to provide you with a lot of great entry points, and that's actually why I chose Enphase for this video, because they provide a much better entry point relative to their competitors currently, primarily due to that short seller report that just came out a couple of weeks ago. So now let's take a look at the valuation for Enphase. Now, if you guys have watched my videos in the past, you know that I normally use a net asset value and earnings power value model in order to find the intrinsic value of the company that we're looking at. However, that is a form of analysis that is generally used by value investors, and given that Enphase doesn't fit the criteria for a value investment, I used a discounted cash flow model by using a high growth and low growth scenario so that you have an idea of what is a solid entry price for the stock. And in addition to that, we're going to be taking a look at Enphase's valuation relative to its competitors so you can see what the best entry point would be for a stock within this industry. Now, as always, I post all of my valuations and spreadsheets on my Facebook group, The Investor Playbook. If any of you are interested in looking at the valuations that I use in my videos, you'll find those for free on my Facebook group. Now, when I conducted a low growth discounted cash flow model for Enphase, I came out with an intrinsic value of $20 per share. And when you compare that with a high growth scenario of $37 per share, currently the stock price is still outside of that range, so you might want to wait for the stock to drop a little bit more before you get an entry. However, when we take a look at Enphase's valuation compared to that of its competitors, we see that it's actually priced lower than any of its competitors, even though it has a leadership position within the industry. Now, the two competitors we're going to take a look at is SolarEdge. They offer very similar products to Enphase, and the other one is Sunrun. Now, Sunrun is currently trading at a price to earnings ratio of around 190, and SolarEdge is trading at around 45. Now, when you compare that to Enphase, who's currently trading at a PE of 28, you see that Enphase is trading far below that of its two main competitors. So now moving into the final section of this video, where I'm going to be talking about what I'm going to be doing regarding this stock. Now, I remember trading this stock back in 2018 when it originally took off, and I'm still kicking myself to this day for not looking into the company a little bit more, as I would have been able to get in on one of the greatest growth opportunities that I have seen in the last 2 or 3 years. Now, after missing out on that massive move, I was determined to get back into the stock, and that's exactly what I did on this dip in March. I bought the stock at $23 per share, and I plan on holding that stock for the foreseeable future. And in fact, I'm actually going to be adding to my position in that stock if it drops down below $30 per share. Now, given that the stock might not drop down a little bit more, something that you could do in order to get in on the stock at its current valuation is to couple that trade with a short position on one of its competitors. Since Enphase is trading at a lower valuation to that of its competitors, what you could do is hedge your downside risk by taking a short position on SolarEdge or Sunrun. Seeing as they're trading at PEs of 45 and 200 respectively, and given that the industry players generally move together, it's likely that if Enphase sees a major drop in its stock price, you're going to benefit from your short position, and then you can roll whatever profits you got from that short back into Enphase Energy. So that is my recommendation for you guys regarding this stock. I hope you guys found this video useful. If you've enjoyed this video, don't forget to like and subscribe, as you'd really be helping me out, and I look forward to seeing you guys in my next video. Have a great weekend.